Warren Buffett's Berkshire Hathaway is hosting its annual meeting this weekend. Tens of thousands of shareholders are expected to travel to hear the Oracle of Omaha's ideas on all things investing. Buffett's investing success has always been accompanied by not just his characteristic humor, but also his humility. The billionaire has admitted he's not perfect and has pointed out his own missteps over the years and lessons learned from them. Our next guest says investors can learn a lot from Buffett. He is Berkshire Hathaway shareholder and is already out in Omaha. Thomas Russo, managing partner at Gardner, Russo and Quinn. Thomas, it's good to talk to you today. You know, we always talk about the big successes for Warren Buffett, but you've said there's a lot to learn from some of the mistakes that he's made, particularly when it comes to his investments right at the heart of the pandemic in 2020.
Well, I must say, thank you for the chance to visit. I must say, it's very hard to find any mistakes that Warren's made that had consequence. I think several things changed during the midst of COVID. For instance, the airline industry investment, which was designed for one world, changed dramatically when airplanes stopped flying, and so the response was to adjust the portfolio to reflect that. And yet, there's so many ways in which Warren has to make money. One has to remember that a lot of the investment success is under the water. It's like the paddling duck. Warren invests tens of billions of dollars a year in the railroad business, in the Mid-American energy business, in the National Indemnity Insurance business. So much of what Warren does to deploy capital is in private companies that are partially held or fully held, in addition to the equity market and other financial services that he works on. Truly remarkable.
So, Tom, then what are some of the biggest lessons then that we could learn or other investors can learn from some of those moves that Buffett has made, not only in 2020, but in any time that he has run up against a challenging environment?
I think the number one thing to keep in mind that Warren Buffett shared with my business school class over almost 40 years ago was that, as he said, you can't make a good deal with a bad person. He stressed even then the notion of character and the notion of agency cost. And the agency cost is what happens when your agent, Warren is our agent as he manages funds on behalf of all of us public shareholders, he has to pledge to give us a fair deal. It's hard enough to make money alone, but to do so, attempt to do so in the face of an agent who's gone awry is doubly hard. So number one, I'd say, was don't make a deal with a bad person. The number two is take advantage of the government's tax break. The only break they give investors is the non-taxation of unrealized gains, and take advantage of it, which drives the third point, which is you have to be comfortable investing for the longest term if you're going to maximize the benefit of reinvestment. And reinvestment being required to have tax-deferred wealth. So 3 words I start with. One is agency cost, one is tax-mindedness, and one is that's it.
So, Thomas, you're already in Omaha. You've got hundreds of people headed your way. What is your expectation for the annual meeting? And more importantly, what are you hoping to hear or looking to hear from Warren Buffett and Charlie Munger?
I think that the timing of this couldn't be better. We've been given the most extraordinary primer on banking finance that you could have hoped for. It was probably more than you actually hoped for.